Hello, and welcome to Portfolio Matters Share Talk. In today's episode, we will be talking about the small London and Australia listed copper mining company, explorer, Castillo Copper. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Tell us about Castillo Copper, Keith.
Thank you, Richard. Okay, so Castillo Copper is listed in both London and Australia. In Australia, there are loads of small copper companies listed. In London, there are very few, and I am interested in copper, and Richard and I both have positions in copper because we're interested in the clean tech revolution, which is going to require a lot of copper, and regular viewers will be aware of that. So Castillo, it's tiny. It's got a share price of 2.65p, market cap of 26 million, and about 3.1 million in the bank. It's got no revenues, and all its assets are pre-development. Okay, so first of all, I own shares in this, but we are going to be quite not negative, but forensic in our dissection of this company. And it is not all positive by all means. But as you know, for regular viewers of the channel will know, we always tell it like it is. And I am aware that I'm a holder of this company and not everything we're going to say is positive. Okay, so the bottom line is, this is a speculation rather than an investment. I think this company has quite a few problems. It was suspended, its operations in New South Wales were suspended by the New South Wales Resources Regulator for environmental infringements. And it's got some pre-development assets in Queensland and in New South Wales and in Zambia, but all of them are at a very early stage of development. In addition, they are spinning the results of those explorations to make things look much better than they are. And this took me a little while to work out what they were doing. And we will take you through that. But doing this analysis taught me a lot. It taught me a lot about the way these small mining explorers spin their results. But they have to declare all the results with enough detail to let you work out what's going on. Otherwise, they could be accused of being misleading. And so there are enough details for us to work out what they're doing. The other thing is they've got very little money and they've got a lot of exploration they need to do. So this company essentially relies on creating a constant stream of positive news in order to allow it to do share placings to get enough money to continue exploring. And so you have to be aware that this company really relies on a constant stream of good news to continue in existence, although it does have one asset it's aiming to sell. And if it manages to sell that, then that would hopefully give it some cash and alleviate that situation slightly. But the bottom line is, it's at the right stage of the mining cycle where good news can create speculation. And having done this analysis, I am going to remain a holder, though I'm not going to add any position to it, anything to my position. Okay, so this is the share price. And I should say that previously, December last year, I bought some Castillo Copper down here. And when the share shot up, I sold it, making quite a nice profit in, I think, 3 weeks. So it's since drifted back down again, and I bought some more. And strangely, it is up 10% today. Okay, now let's go through its history, because I think you get an idea of this company from going through what happened. So it really starts life in 2017 when it bought exploration licenses for three areas: Kunga Barren, Peak Hill, and Mount Oxide. And we're mainly going to be talking about Mount Oxide. Then issues shares to raise very small amounts of money at 1.5 cents. Now, obviously, there's it's dual listed, and in Australia, the shares are now 4.6 cents. But there's obviously a difference between the price in Australian dollars and on AIM. Okay, then in August 2017, it buys 3 more licenses, paying in shares, capital raise 3.2 cents, 2017. Kangai, they have a assessment of the size of the resource, and that looks great. 3.2 million at 3.35% copper. Brilliant. That's a lot of copper. And so you see these shares then reached a peak from when they've drifted off. In mid-2018, it formed a joint venture to explore in Queensland, but that fell apart quite quickly. They essentially in early 2019. Now look at this chart. Look at the timeline on this chart, and you will see that the timeline for 2020 is quite large, but the timeline for 2019 is very short. The reason for that is that the shares spent most of 2019 suspended, and they were suspended because the New South Wales resource regulator visited their exploration activity at Kangai and didn't like what they were doing and suspended their license for environmental infringements. And they had to rectify their faults before they were allowed to resume exploration at Kangai. And during that time, ACAP Resources withdrew from the joint venture. And were the two connected? You suspect they might be. In July 2019, it acquired 5 Zambian copper projects, raised more funds, and after its attempted sale of Broken Hill fell through, it essentially went on its own and added tenements to Broken Hill, which it is now trying to divest. And in August 2020, it commenced trading in London. So in February 2020, it formed this alliance to market Broken Hill, and the alliance was due to last 6 months. And if they didn't find a partner in that period, it would lapse. It lapsed. Okay, so what happened in 2018, 2019? The shares were suspended between the 27th of December 2018 and the 29th of August, so a long time. And New South Wales regulator visited Kangai, and in order to get their license back, they had to implement various measures to meet environmental standards. So to reduce their environmental impact, especially appoint an expert or a qualified person who would manage the disturbance they were creating. Okay, let's go to a company overview. So they claim they are trying to create a mid-tier copper group. They have projects in Queensland, New South Wales, and Zambia. And they are now looking to divest of Broken Hill. Their main asset is going to be Mount Oxide currently, and we're going to talk about that. Broken Hill, they're now trying to divest. Zambia, these are all at very early stage. Kangai, there is a historic mine with good copper grades, but so far they have done very little work there. Board of directors. Now, here's an immediate red flag for me, in that they're all finance people. There are no miners here. So the chairman actually does have some mining experience. If you remember our share talk on Trident Resources, Sandfire Resources, of which Rob Scott is a board member, was developing a big copper mine in the Kalahari in Botswana. So Sandfire are a credible company. But managing director, finance, non-executive director, finance, company secretary, finance. These aren't mining people. Okay, let's go on to Mount Oxide. Okay, so Mount Oxide is close to a few historic copper mines, and that is generally a good sign, because, you know, the copper mines were developed at the turn of the 20th century. You know, they're basic artisanal mining, really, and you had to have high copper grades to make that worthwhile. And generally, they will have left quite a lot of copper in the ground, which with modern mining techniques, you can profitably extract. So that is a good sign. And now we're going to watch a video. So before we do that, the video we're going to watch is of the Mount Oxide mine here, which is within the Castillo copper tenements.
And the river's cleaned it.
Okay, so this gives you an idea of what the environment is like. And that is the Mount Oxide mine, which is frankly an environmental catastrophe. The lake at the center of it has a pH of 2, yeah, which is very, very concentrated acid. And anything that falls into it dies. So, but anyway, this is the environment around the Mount Oxide mine. And these are the old mine workings of Mount Oxide. And there are actually these tailings. And so whenever it rains, the Mount Oxide mine overflows, lake flows down into the nearest river, all of which seems like a total environmental catastrophe, frankly. Okay, so going back to the mines themselves. Okay, so within the Mount Oxide prospect, there are 2 areas in particular they're very keen on. The big one and Aya. Now, the big one was originally looked at by BHP and Mount Isa Mines, MIM, who did some preliminary work there in the 90s. Aya has been identified by BHP with an airborne survey in 1997, but more recently there was an Geoscience Australia airborne geomagnetic survey which identified an anomaly there, which looks interesting. And Castillo Copper have access to those that data. And the Boomerang mine, which they're not currently talking about, but that looks interesting. Between 1944 and 1974, 4,000 tons of ore was mined at about 6%. Great. Okay. So all the preliminary work that Castillo Copper have done was using historic data from BHP and MIM, and then rock chip assays. They went round and just collected rocks and from the site, and then exploratory drilling only began in Q4 2020 and is about to restart very soon after the end of the wet season. Now, the question you have to ask in all these cases is, why did BHP divest of this? And when they divested of it, they sold it to a tiny company called Perillia, which rapidly got into financial difficulties. And this mine has been traded around for years without being developed. And so the question is why? So let's look at the drill results that Castillo Copper have recently reported from Mount Oxide. And these look good. So what this chart shows, this is the B0017 drill hole, okay, core sample. And it was 34 meters down. And the breadth, the width of these bars show how much copper there is at every meter depth. So, and this table gives you the statistics they're reporting for that core. So they're saying 34 meters at 1.51% copper. I mean, that's pretty good. 21 meters at 2.25%. 1 meter at 9.4%. But overall, this looks really good. When we talked about Trident royalties, one of the mines that they had a net smelter royalty on was the Pucacaca mine in Peru. And that was a copper project with a grade of about 0.4%. And they're considering that as economic in Peru. Here, you have something with 4 times better copper grades. I mean, this looks good. And then the B0015, which comes across, that has 18 meters at 0.86%, 6 meters at 1.85%, 1 meter at 8%. Also good. So at this point, I am thinking this looks really good, actually. Why has this only got a market cap of 26 million? What am I missing? And it took me quite a while to work it out, but we can disaggregate this data, and it's important you understand how this goes on. So let's look at my disaggregated data for B0015. Okay, so if you work out exactly what that core looks like, you'll see actually almost all the copper is in 1 meter. So there's very little copper until he gets 9 meters, then there's a spike at 8%, then there's very little. Okay, now let's go back to the original representation of that drill. And so what they're saying is 18 meters at 0.86, yeah? But that includes the 1 meter at 8. And this is what put me on to what they were doing. Because I thought 18 meters at 0.86%, and they've got 1 meter at 8. That must mean there's almost no copper in the rest of the grades, rest of the sample. And if you look up here, this is what they reported. So 18 meters at 0.86% from 11 meters. So starting here, so the 18 meters from here to here, 0.86%, including 6 meters from 20 meters at 1.85%. So from about here, 6 meters, 3 meters also from 20 meters. So that 6 meters at 1.85% includes the 3 meters at 2.98% and 1 meter at 8% also from 20 meters. So all this essentially double counts. The 3 meters from 20 meters includes the 1 meter at 8%. And the 6 meters at 1.85% includes the 3 meters. Yeah. So this makes everything look much better than it is. If you disaggregate it, this is the pattern you get. And essentially, my model of their core calculates the total volume of copper at 0.1554 versus their reported data of 0.1548. Yeah. So this model seems to be an accurate representation of the core. And now, if we go back and look at the drill, the core B0017, 34 meters at 1.51% copper, that looks great, including 21 meters at 2.25, 12 meters at 3.44, 6 meters at 4.79, 1 meter at 9.4. But again, if you go and look at how they're calculating that, 34 meters at 1.51% from the surface, so from the top, 21 meters at 2.25% from the surface to here, 12 meters at 3.44 from 3 meters. So essentially, this 21 meters at 2.25% includes all the good stuff, which they've also separately reported. So the bottom line is, when you look at the disaggregated data, you'll see that most of the copper is in very small zones. So in the B0017 core, almost all the copper is between 4 meters and 15 meters. With this 9 meters looks great. B0015, there's essentially one spike at 9 meters. Then there's a little bit more, 0.72% between 12 and 14. Yeah, I think the way they have reported this is really quite misleading. Okay, so let's look at their other most successful, most positive cores. Here you have reverse circulation drill 303 and got 40 meters at 1.64%, including 11 meters at 4.4, 5 meters at 7.34, 1 meter at 16.65. But again, that is all double counting. The 5 meters at 7.34% from 28 meters includes the 1 meter at 16.65% from 29 meters. So this is the pattern you see. Actually, the vast majority of the copper is in this small region, 10-meter region, starting from 24 meters down. Okay, and again, my model closely resembles their reported volume of copper. We'll move on to the next one. Reverse circulation drill 301, 44 meters at 1.19. But again, it's all within a small zone. Actually, quite good. So the picture we're beginning to build is of actually a very small ore body, but with quite high grades of copper within it. And this is a map of the ore body from above, which shows the cores they have drilled. Okay, so the dashed red lines are where they believe the copper body is. Okay, so the first thing to notice is it's thin. So down here you have the scale of the map, and how wide is that? 10 meters at most. But also notice how close together their best drill cores are. So that we've looked at reverse circulation, that's RC 303 and 301, and see how close they are together. What, 20 meters at most? And then the vertical cores they took, B0017 and B0015, they are here. So that's another 20 meters. So in total, the best area is 50 meters long, and then it's not very wide. And we know from the disaggregated data that the copper was within a small vertical band. So the picture you're now starting to get is a really quite a small ore body. And where we are is there is as yet no JORC, no estimate of the copper in place. But we're just about to have a new drilling campaign, and hopefully the JORC is going to be prepared soon, they're saying. So we will have an idea soon of how much copper there is there, but they have announced the strategic intent to recommence mining at the big one. So they're planning to develop this and to process the ore by third party. But the question is, based on what we've seen, is there enough copper there to justify a mine? Not sure. Okay, let's move on to Mount Aya, which is also within the Mount Oxide tenement that they have the license for. And everything has been done basically from geomagnetic surveys. So there's this anomaly there. They've done some rock chip assays, which means they go around and actually just collect chips from the ground. And that looks quite good. But then, the ore body is deep, and you can only learn so much from just picking up rocks on the surface. But they are saying that the surface sampling means that there may well be copper down below, and they've identified various anomalies, and they've got 14 planned drill holes, all of which should be commencing quite soon. The team is back on site after the wet season. So these is the RNS on the 7th of April, exploration resuming following the end of the wet season. They're planning a geophysical survey campaign, hoping to extend the known mineralization at big one, which, let's hope they do, because it seems quite small currently. And then they're going to move on to Aya. And they have they've got a new tenement, and that expands the core Mount Oxide project by 23% to 980 square kilometers. So this is huge. And they've got plenty of targets there. Okay, so that was Pillar 1. Pillar 2, Broken Hill Alliance, which is in New South Wales and is now for sale. And they're saying they've seen renewed interest in the area, so they're hoping they can divest it. But they've got some big tenements, exploration areas close to old mines. So perhaps somebody will pick it up, and that would certainly, the cash would certainly help their exploration campaigns elsewhere. Okay, Pillar 3, Zambia. So they picked these up a couple of years ago, but these are all not only pre-development, but they're pretty much pre-exploration as well. I mean, all that they've done so far is rock assays. So their team has gone around, picked up rocks from the surface. But, Zambia has lots of copper mines. It's got these copper trend lines, and their projects, their tenements, are close to existing mines. So these are the X-ray fluorescent results they have achieved by just picking up rocks from the surface. And this is the Mkushi project. So the Chinese have this mining license here within their block their tenements. But one of the copper veins seems to extend outside the Chinese area, and there's this 5-kilometer area in which it goes through theirs, which is potentially interesting. And they're, from picking up rock samples, they have identified all these anomalies. But the bottom line is this is all really early stage. You know, acquisition completed in July 2019, preliminary analysis and soil sampling in 2019, collecting data from the ground. There's been no drilling, is the bottom line. Last RNS was November 2020. Next phase of Zambia exploration is a ground IP survey, which can identify geophysical anomalies and delineate potential targets. So, they are some way from drilling, and that means they are a long way from having even an estimate of copper in place. They could be 7 to 10 years from having a mine. And finally, the fourth pillar, Kangai, which is, you remember, where the New South Wales resource regulator suspended their exploration license in 2018-19. And frankly, this looks good. There are historic mines there. And Castillo want to bring the Kangai copper mine towards a bankable feasibility study, i.e. fully costed development plan. And they have core samples up to 14.45% copper, and with also zinc and silver. But where we are is we're a long way from having a mine, or even a feasibility study. So in order to get to the bankable feasibility study, they first need to do a load of drilling and geophysics to work out what they have. They then need to do a resource modeling to work out how much copper's in the ground, pre-feasibility study, how they're going to develop a mine if they can, mine planning, secure the mining lease, and environment and social permitting. And given they've just upset the regulator, not trivial. But it looks good. I mean, so what's interesting is there are lots of historic mines there. We'll see a photo of them, some of them in a second. And they, with the technology they had at, turn of the 20th century, they would almost certainly have left areas of high mineralization behind when they left. And you can see in this area in the red circle, they've got some really interesting drill cores. 11 meters at 5.94% copper, 2.45% zinc, 19 grams a ton silver. And there's also further down, there's a downhole in electromagnetic survey anomaly. So further down, there may be more interesting things. And this is a cross-section of the Kangai copper mine as it was between 1908 and 1914. And you can see that there were lots of areas of mining, but there's this area here which was never developed and which is potentially interesting. So there's clearly quite a lot of copper in the ground here. And this is the Castillo Copper team in action, collecting rock samples from Kangai in 2018. And frankly, honestly, this company just seems a bit amateurish. I mean, it looks like they've sent their dad in there with a rock hammer. And that, in conjunction with the fact the regulator has suspended their operations there, just makes them seem quite unprofessional. But there's almost certainly copper there. They actually have an estimate of resource in place from 2012, i.e. before they got the license, showing 107,000 tons of copper potentially. Interesting. And, these are pictures of the mines, pretty basic. Turn of the 20th century mines with clearly a lot of mineralization remaining. So that looks promising. Okay, so if we go back to the mining cycle for all these mining explorers and developers, and this is from the Alta Strategies presentation. And you can see previously we've talked about the value valley and how the life cycle of these junior miners is that you search around for something that looks interesting. You then do some exploratory drilling and you report that there's something there. And the price generally rises very strongly as you report that there is resource in place and investors become excited about it. So that you see a massive, big rise in the share price at that point. However, you then have years in which you have to work to develop the mine and you have to get it financed. And during that period, there's not much news coming out and shareholders see it. It looks like you're giving away value to the finance people and money is just running out of the company. And before money comes in from actual production, and then you generally see the share price coming off. Now, I think Castillo is somewhere down here. All their assets are really exploratory, pre-development. And so Castillo are going to depend on a constant stream of positive exploratory news to keep their share price up, which will allow them to sell shares to do more exploration. And so I think they're down here. And if they can report good exploration results, you could well see the shares fly. Okay, so results, there's pretty much nothing here, frankly. Haven't got any debt and they've got a bit of cash. Yeah, but so far, no revenue. So moving on to positives and negatives. So positives, why are we interested in this? We're interested in it because the copper price is high and we're looking for copper developers. The big one has a promising ore body, but as we've seen, it's not very big. Is it economic? That is the big question. They're just about starting to look at Aya, and that looks promising. And hopefully within the next months, we will have results from the first drilling of Aya. And if that comes through, perhaps that sends the share price flying. That'd be great. Kangai also looks promising, but I believe there are no current plans to drill that, and it is a long way from having a bankable feasibility study. Again, there's lots of potential in Zambia, but very early stage. But the most positive thing for me is that it's the right stage of the mining life cycle to create shareholder value if it can deliver some good exploration results. Now, negatives. Well, there are a lot of negatives here. I mean, frankly, I think the way they have reported the drill results at Big One are borderline misleading. And that taught me a lot. Now, I'm sure most other mining explorers also report their results in the same way, but I hadn't previously been aware of that was what the game was. The New South Wales resource regulator obviously suspended their license at Kangai. Not great. Sailing close to the wind. Management are mainly finance people. And this is a company with little cash and lots of exploration commitments. So in order to fund itself, it needs to issue shares constantly. And if it can create enough positive good news going forwards, that's possible. But you can see that if the exploratory campaigns failed, it could rapidly end up in a negative spiral where news is bad, people don't want the shares, it can't sell the shares, it can't get money to do further exploration. So it needs to create a positive spiral of positive news, allowing rising share price, allowing them to sell shares. But this is very early stage. Everything is not just pre-development, but at a very early stage of exploration. Richard, what are your thoughts?
Well, thank you very much, Keith. As ever, a very detailed examination of the issues there, and a very good explanation of the how careful one has, why one has to be very careful when interpreting the presentation of exploration results, and make sure you really understand what they're saying. And this is obviously a company that has resources that may have potential, but as you say, it's in a very early stage, and which makes it a speculation more than an investment. I think that's quite important, because there's no guarantee that any of these potential projects will come to fruition. One would be hopeful, I guess, that some or all of them will do. So you need to, I guess, you need to make sure you size your investment according to the risk, which is at this stage high. And I suppose the other point is you've identified where they are, where you think they are on the value, the mining value valley, and they could be on that upslope towards the first peak. They could be anywhere really on the upslope towards the first peak. It's very hard to tell. And if they're near the bottom, there may be substantial incremental price rise as their resources are more clearly illuminated. But if they're nearer the top, then your risk-reward ratio is much lower. And I think that's another consideration that's quite important. So I think it's a salutary presentation saying there is value in these businesses. There are probably a number of companies in similar situation, but you have to probably spread your net widely to de-risk your portfolio.
Yeah, no, it's investing is a constant learning process, Richard, and I owned the shares in this, and I'd briefly looked at the results, and results looked great, but I couldn't work out what I was missing because the market cap was so low. And I'm glad I kept on digging, because this has really taught me a lesson about how
but presumably also, Keith, there are a number of investors out there who have also done a similar amount of digging, because if the market cap is this low, other people understand what the situation really is. And but there will, there's obviously a range of people, from those who buy and hope to those who analyze in detail and really understand what's going on. And I'm sure it's much better to be on the latter end of the spectrum.
Well, I think the thing you need to do is just keep your eyes out, be aware of what the true situation is, and keep your eyes peeled, because this could fly. If the eye of prospect, which comes through, looks good, then the shares could, shoot up on speculation as they report, great drill results. And that they're going to spin it in as positive a manner as possible, as they did last time. And you saw that last time the share price shot up and then it drifted off again. And you do wonder whether people worked out what they'd done.
You also need an investment strategy for this type of business, don't you? Where perhaps you put a small amount in at this stage, so you keep an eye on it and you have a stake in it, and then you mark in your mentally various stages at which you would invest more if the results are positive.
Yes, so that's a very good plan, actually.
To de-risk. So in your case, Keith, you've got a stake. You might say, well, if the results from our year come through and are very positive, I will put another, X% of my portfolio or X pounds into this investment and map it out like that.
Yeah. Well, I think we did a not share talk, but a My Worst Trade with Luke Oldfield yesterday. And again, he was talking about Arian Silver. And when investors get behind a company and they like the story, the shares can absolutely fly. And so I think it's worth having, a few companies that you like, where if the shares take off, just, hang on to the tail of the tiger and see how high it will go. But be very aware that you don't want to hold these shares long term necessarily. You want to ride the speculation.
I agree. Well, thank you very much, Keith. That was a really interesting presentation, and hopefully our viewers are better informed for it. I'm sure they are.
Great. Okay, well, thank you all for watching. I hope you'll subscribe and press like. And in the meantime, it is goodbye from Richard Wheater.
And it's goodbye from Keith Jordan. Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.